Hello everyone, welcome to a new video of the indicator store of the series Do It Yourself. Today, this is a continuation of the last video of the last week, where we created a strategy where we detect the crossover of two lines, in this case two exponential moving average, and we got this strategy, and the idea is, okay, now which are the best parameters to use for that strategy. This strategy has several parameters: the target, the stop, the fast and the slow moving average, and also we added a threshold. And the threshold is the distance, the minimum distance between the two lines to trigger a signal. Here we can see the signal. The signal were created with markers. This is not part of the system, but this is just a tool to help to create the signal. But when we enable the strategy, we can see the signals and the trades. Now, which are the best parameters to use? For that, we have strategy analyzer, because we are tempted to try manually different settings. For example, 10 ticks in this example for the target is too small, as you can see. But I don't know, maybe 100 versus 100 for the target and the stop. Now we get something like this. A short with the target, a long with the target. This long is not executed because it is already long from the previous trade. This long is stopped, and then the 100 is too small for a stop, and a long with the target, another long with the target. Maybe we can try the strategy performance of what we have on the chart, but again, this is not a good idea, because this is just the performance of the trades included on the chart, and maybe the chart has only 10 trades, 13 trades, so this is not too much, this is not significant at all. Maybe with a bigger target and stop, take into account that this is the Nasdaq. Maybe 200 versus 200 is more realistic. Now we can see we have a target, a long. We are skipping two trades because we are already long. Skipping another trade here, and finally we have a target. And the performance of the trades on the chart now, it is excellent. This is too good to be true. And more about that when we watch the report. We have only 9 trades. Statistically speaking, 9 is useless, okay? We need no less than 100 trades to think that the performance is okay, that the statistic is valid. So let's open a strategy analyzer. The name of the strategy is my custom strategy XX. This one. And when we select optimization, each parameter is now a range. Starting point, ending point, and the interval. For the target, we saw that 10 is too small. 200 is more or less an average. So we can try a maximum of 400 ticks, twice of what we saw on the chart. Starting with 40, 10 is too small. I should start in 50, but to make it more round, between 40 and 400 in intervals of 40, we have 10 combinations, okay? 40, 80, etc. We have 10 combinations. And for the stop, we do the same, 40 to 400 in intervals of 40. So we have another 10 combinations. In total, by now, 10 multiplied by 10 is 100 combinations. Again, those minimum and maximums are related to the instrument that you choose. Okay, on Nasdaq, you need big target and stops. On another instrument, it depends. Okay, you need to watch the chart and have an idea which is the minimum. And for the minimum, I try to avoid using anything less than tick, because for statistical reasons, if you have a slippage of 1 tick at the entry and 1 tick at the exit, more or less 2 ticks of error, the smaller the number, imagine that you have a target of 1 point, 4 ticks. 2 ticks of error in 4 ticks is 50%. This is too much. 2 ticks in 10 is also important, but not so bad. So the idea is, the bigger the target, the less importance is the effect of the slippage. So at the beginning, when I try a strategy, I let these settings, the default as default, okay? I only test different targets and different stops for different time frames with the default settings. So let's select the Nasdaq and 5 minutes, my preferred time frame. How much for the time interval? This is something that we need to check for each case. On 5 minutes day trade setup usually can create 100 trades in no less or no more than 3 months. But of course, if you have a trade setup that trade the gaps, for example, the open gaps, you have only 1 trade per day, you will need more than 100 days, of course. So that depends on the strategy. But the idea is you need more than 100 trades to have a valid statistic. So again, that depends. On this chart, we saw that we have several trades per day. So I think that taking 3 months is okay. So for the ending date today and for the starting date today minus 3 months, 3 complete months and something of this month. For the trading hours, the session template corresponding to the instrument that you are going to trade, of course. We need to include commissions. And then what you want to optimize, the operating factor or whatever. For me, the most important factor is the profit factor, but there are a lot of settings to optimize, and one of them are user custom definers. Some of them are created on the training sessions that we have, but the most used is the profit factor, and also we have the R square, but we are going to talk more about that later. So starting by profit factor, if you click on run, you can see that it is testing 100 combinations, because we have 10 combinations of targets multiplied by 10 combinations of stop. And what we can see is that we have a good number of trades, so the statistic is okay, but the profit factor is it should be greater than 1.4. Greater than 1 means it makes money, but between 1 and 1.4 the system is not robust. It's too sensitive to variations or problems. One way to measure how sensible or the robustness of a system is one looking at the equity curve. We can see that this equity curve is not so good. But let's try different time frames, okay? So default parameters with multiple targets and multiple stops on different time frames. For example, 5 minutes was before, now 10 minutes, and we can see it is even worse. And 15 is, I guess, it is going to be even worse. That means, okay, we need to go to the other side. Maybe 3 minutes. And then 2 minutes and 1 minute, okay? This is completely, this result is complete random, okay? There's no edge at all. This is 2 minutes, completely random. A profit factor near to 1 is the worst that we can get, because a system can be too good or too bad, because a bad system with a profit factor of 0.7, at least you can invert the signals, going short when it says long. But when it is flat, you can do nothing, because everything is lost in commissions. So we need to do something. We need to test different settings, okay? So let's continue with 5, which seems to be the best of all. Now, let's try different fast periods. So we can try something like 5, an EMA, an exponential moving average of 5, really fast. And the maximum of the fast moving average, maybe 50. And we go in intervals of 5, okay? So we test between 5 and 50. And for the slow, now we have a problem, because sometimes the fast is going to be slower than the slow. But there's no way to avoid this in this setup. For the slow, we can try with a maximum of 100. And the minimum, we can try exactly the same, between 5 and 50 and for the fast. And for the slow, between 5 and 100, but with bigger intervals. One in intervals of 10, and the other in intervals of 5. The idea is, on the first report, we are not going to get the exact best result, but at least we have an idea where are the best settings, okay? And then we can approach to those settings. Okay, so let's see how many combinations we have here now. The best way is to click on run, and then at the bottom you can see we have 11,000 combinations, okay? Not too much, we can wait, but if you add complexity, more parameters, or more resolution, decreasing the interval, then that number increases a lot. And really, we don't have so much time to calculate. And so on this case, we can use another method, the genetic method. On the genetic, instead of testing all the possible combinations, we select from those 11,000 combinations, we select randomly what we set on generation size. For example, 100 random combinations of those 11,000, okay? Random. Maybe they are close, or maybe no, from the best settings. But anyway, we select 100 random and backtest those 100 combinations. Calculate the profit factor, or whatever we select here, and sort from the worst to the best. Okay, and then we test again between the best possible values. How many times? 10 times. So we backtest one time the 100 different results, calculate the profit factor, sort, and then we test again for the 10 times in total. In total, how many backtests we have? 100 multiplied by 10, 1000. This number each one adapt this number to whatever you want to spend in your report, or the capacity of your computer, of course. If you want to increase this time, you can increase the generation size. With 10 generation is more than okay, but you can increase the generation size so you have more random combinations at the beginning. So this equity curve seems to be fine. The most important is always what happened on the days closer to today, the last part of the equity curve. Know what is happening here at the beginning. This is the most important. What can we expect for the future more of this until the pattern degrades, because that always happens. So we need to take into account that we have enough trades. Also, the win percentage is important. It should be, I don't want 90 something percent of winners. I prefer something below 70 and bigger than 30, because this number is proportional to the size of the target and the size of the stop. If it is 90 something, the target is too small. If it is 15, then the stop is too small. Okay, so the closer to 50, the better. A balanced system is when this is closer to 50. So we have a good win percentage, good number of trades, and then the profit factor. A profit factor bigger than 1.4 means that it is robust. And also, of course, the equity curve should be smooth and linear and ascending, of course. If it is okay, then we can start to improve this by decreasing the intervals and approaching to the selected values. For example, what we have on parentheses are the parameters for this setup. We have a fast moving average of 20 and a slow moving average of 80. I have not optimized the threshold, I forgot to do that. We can try optimizing the threshold also. Here on the chart we are using a threshold of 5 points. The red line is at no less than 5 points to trigger a signal. On this solution it is 0. Okay, as soon as the line crosses one each other, we have a signal. More things that we need to take into account. Which is the importance of the profit factor? Let's see different solutions, because sometimes we may be confused because the equity curve seems to be too nice. For example, this equity curve is okay because it has been working for half of the interval and the last part of the interval. But look at the profit factor. It is 1.22. It is making money, but the system is not robust. And what it means that the system is not robust, which is the importance, and how can we measure if our system is robust or not. If we optimize a system, and something I am also forgetting, the minimum of the target, I guess I already mentioned this, but when we have a slippage at the entry and at the exit, that number of 2 ticks is important when the target is small. So the idea is, when we optimize, try to use a minimum bigger than 10. Okay. Now let me go back to the way to measure the robustness of a system. We have the Monte Carlo report, and the Monte Carlo report executes all the trades of a system 100 times. The same setup 100 times. But the results are not the same, because we know on real time the same system is never having the same results on one chart or even on another chart beside the other, because the fields are not the same, you don't have the same delays. Even if I get a field on one chart, is because there's another trader on the other side doing exactly the opposite to me. Okay, so to have 2 trades doing exactly the same, you need again 2 traders doing exactly the opposite to you. So it is impossible to have 2 systems having the same performance. Now, how can we emulate that randomness? The Monte Carlo executes the same system 100 times and add noise, slippage, delays, whatever. And the 100 results are sorted from the worst to the best, as we can see on this chart. from the trade number, the run number 0 to the run number 100. Each one of the runs of the executions has 260 trays, okay? Because they are the same trays. And if you click on generate several times, the curve is different because the random noise is different. And we have more or less a band of error where we have an idea near the 50 is the result that we have here. And usually on real time we are near the 50, more or less 20 to the left, 20 to the right. But now, how can I measure the robustness or sensibility of a system? I can, to these 260 trays, we can remove winners, only winners. So if I remove 5% of the winners and execute all the trays again, now we can see that the lines are below. A very good, a very robust system is almost imperceptible, the distance between one line and the other. But anyway, on this solution, the results are also positive, even not taking 5% of the winners, not executing 5% of the winners. Now you can say which is the reason, because you are not executing 5% of the winners. That happens when we take part of the trade, like for example, making decisions like this trade is not going to work, I don't trade it, and it was a winner. I don't trade this because I don't like it, and it was a winner. And finally, you enable the system and it was a loser. That happens, okay? Now, which is the problem of not executing 5% of the winners on a robust system? It should be not so bad. Let's say if I select this one, look at the profit. The profit is the same, 34,000. Okay, but the only difference is the profit factor. Now, what happens if I do the same? So this is what we get trading all the trades. Okay, it is closer to the 0 if you look at the bottom. But what happens if I remove 5% of the winners? Now you can see the difference. The robustness of this system is useless because it is now on the negative side. So that means if you have an error, if you miss one trade, or you have a delay, then the results are so different to what you calculated that your winner system is now a loser system. Okay, so this is the importance of having a good profit factor. The bigger the profit factor, the better, but be careful because anything bigger than 2 should be analyzed because there are so many errors that you need to take into account. But maybe we get an example now. Let's say we change the optimization fitness. No, this is the profit factor. We are sorting the result by profit factor, but there's another one, the R square. The R square is the linearity of the equity curve. It is a number between 0 and 1. 0 is completely randomness, 1 is a perfect straight linear line. Now what happens? The R square report included with NinjaTrader is just looking at the R square, a number between 0 and 1. But we can have an equity curve going down. It is linear, okay? And even worse, it can have only 2 trades. 2 points is a perfect line, no? Okay, this is not the case of 2 points because we can see we have almost 300 trades, but it is linear to the downside, okay? And even you can check on the profit factors. The 2 first are losers, the third one is a winner, and it is linear, okay? So this is the most linear that you can get, but the profit factor is poor, it is below 1.4. So the robustness is worse than the previous. And the only advantage of this system is that it is linear in all the analyzed time interval. But I don't care what happened at the beginning of the test. The most important is what is happening now and the previous days. Okay. Let's try. Let me go back to the profit factor. This one, profit factor. This is included with NinjaTrader. And try also the threshold. We can try different thresholds. For example, between 0 and 5. So we have 5 more combinations. How can I know how many combinations? We can change this to default and click on run. And now we can see we have 66,000 combinations. Okay? As long as I am testing at least 1%, 1% of the total number of samples. For example, if I have 100,000 combinations, testing 1,000 is okay. Maybe if I don't get a good result at the first run, I click on run again, and usually at the second, third click, you get something that works, if it exists, no? Because maybe there are no good results at all. So what can I do if I have too many combinations? If I have 1 million, for example, the only way that you can decrease the number of combinations is changing the intervals. Doubling the interval decreases by half the number of combinations, and also the opposite. No, if you want to increase the resolution, do the opposite. So let's try 1,000 combinations. For that we need 100 multiplied by 10, 1,000. 1,000 again of 66,000. So this is test number 1. And I am going to test also clicking on run several times, so you can see that the results are different. But that's okay, because each time we start with 100 random settings. This seems too good to be true. The equity curve is really smooth. The profit factor is 5. So something strange is happening. Anything bigger than 2 needs to verify. And we can see that the number of trades is too small. It is lower than 100. And which one has more than 100? This one. And the profit factor is smaller than 1.4. On the training sessions, we created a custom optimization fitness to discard all the solutions with less than 100 trades. If you don't have the custom optimization fitness, you need to click on run several times until you find something that works. But it is important to understand how the optimization, the genetic method works, because it backtests, sorts, and this solution, for example, is going to be always at the top. You never get rid of that solution. So it is not testing better solutions just because one space is used by this useless solution. Okay? But if we change the optimization fitness to discard solutions with less than 100 trades, then everything that we get has more than 100 solutions. Okay, so we backtest, discard, and sort, and then backtest again, discard and sort, and so on. So let's see how this report works. It should not show any solution with less than 100 trades. Okay, this solution, it is not linear at all, but on the last days is more or less linear. Okay, it is going up on the last weeks. The number of trades is okay, the profit factor is okay, but look at the percentage, at the win percentage, 90%. It is winning too many times. Okay, making 9 winners and a loser. So the target is too small. I don't want solutions with targets so small. The second solution, maybe, but on the last days it is flat. So the most important is the last days should be okay. This solution has a low profit factor, but again, we can click on run and search another set of solutions. So using the genetic, we have this limitation. If you don't like the solutions, you need to click on run until you get something that works. Or you test all the solutions and wait. This one is close to 1.4. That doesn't mean it is not useful, okay? But I prefer to spend more time until I find something better. Again, we should be testing different time frames near the one that we target. Sometimes it is easier to find a good parameters on one time frame than on another. This one, 90%, I don't like 90%. The second, no. Let's try 3 minutes. Another interesting thing that includes NinjaTrader on the last versions is you don't need to write all the results of each solution that you test. For example, the solution is okay. The number of trades almost too close to 100, but this is okay. This one is even better because the slope to the upside is really steeper than the previous. But the idea is, what happens if I like the version that I tested 3 or 4 runs again? I don't have the settings. Now we can show the log, and here you have everything that you tested historically, unless you deleted this. But now you can see everything that we tested today, or from the time that you deleted the reports. For example, if you like one of them, you can double click and it will open the report and also show all the settings on the right, okay? So no need now to write the results of each solution. Here we were not testing the threshold. Now if you want to delete this, because it is using space. Now if you want to delete, you can remove all non-selected. For example, if I want to keep this and a few other solutions, you can mark those you want to keep and then remove all non-selected. And if you don't want to see that anymore, you can untick the show with the logo. This is what we see on the Ninja script training sessions. This is a long topic. As you can see, it is not a click and run, okay? You don't get the results on only one report. This is an approaching method where you need to test, because this is the first run. We are testing from all the targets, from the smallest to the biggest, and when we find something that more or less works, then we can focus on those results, approaching to those results with more resolution, okay? Decreasing the range, the minimum and maximum closer to the target, and then decreasing the increment, so we have more resolution. But anyway, this is just a quick view of what we see on each training session. Even more, you can see on the chart, this is something that you can also check, because sometimes the system is always in the market, or making trades too small, or one bar trades that we need to avoid, of course. There are a lot of things to cover on a short video like this. But anyway, if you are interested in topics like this, optimization, statistics, and everything, we have a training course. For more info, you can go to the chat room that we have on Discord, and the instructions are on the description of this video. Thank you, everyone. Bye bye.